What's up, everybody? It's Brandon LoCaron here, and today we're going to talk about the 1% rule and really how it relates to cash flow, especially in today's market, right? Because we know interest rates are relatively high, and I just want to show you guys exactly what 1% rule could help you with, especially as interest rates start to get higher and possibly even higher. So, without further ado, let's jump into it. So, 1% rule is 1% rule simply states that if a property, for instance, is $1 million purchase price, then 1% of that needs to be the monthly income. So if we use a $1 million sales price on a, let's call it a multifamily, maybe it's a fourplex or something, that income needs to be $10,000 a month. So this needs to be our monthly income. So the 1% rule is a really great rule to go by because it helps you cash flow even in markets where things are changing, right? And it could help, start create like true wealth and really, generate massive cash flow. And it's roughly about a 10 cap. So whenever you hear like a cap rate of 10%, generally it kind of stays very close to this 1% rule. And a lot of it doesn't necessarily include management fees or anything like that, but it's a good rule of thumb, especially when you're looking at emerging markets or places that are starting to have high growth. You want to look for 1%, and then maybe, just maybe, you could get in before it starts into a appreciation market. So, in this example today, $10,000 a month. I want to show you guys where interest rates were previously, right? So interest rates on a 4-unit investment property was about 4%, like right during the pandemic, right? So 4%. So I just want to show you guys at 4% interest rate. Guess what? And I ran these calculations earlier. Use a mortgage calculator, and basically our interest rate would have been 4% during the pandemic, and our total monthly payment would have been just over $4,800. So $4,869, right? Now, one of the things I use for this is essentially I used a property tax rate of $900 a month, and I use homeowners insurance monthly of $150. So as you can see, basically in this example, your total monthly payment would have been like almost $4,900. And obviously this doesn't include management fees or anything like that. But it goes to show you how much your cash flow would have been during the pandemic. And really and truly, the people that sat on the sidelines during the pandemic and didn't buy real estate like are really kicking themselves in the butt, right? Because now interest rates are high, and they could have had like a true asset that is genuinely generating some serious cash flow for them, right? So I kind of want to show you guys too how much it would be at, I don't know, 8%, right? Which is roughly where it is right now for, an investment property, right? Hopefully you guys can read my chicken scratch. So this today, right? If you were to go down and put 20% down, again using the same tax rate of $900 and $150 a month insurance, what you would see is about $69.20, right? So as you can see, if you bought during the pandemic, you'd be cash flowing just over $5,000 a month. If you bought now, you would be cash flowing, I don't know, call it $3,000 a month, right? Now let's say interest rates go up to 10%, right? Which we know that Jerome Powell is saying that it could possibly get there. So what it would be, curious to know anyone's guesses, but basically at 10% interest rate, your monthly payment is just over $8,000. So 8070, right? The thing about it though is with the 1% rule, you're still cash flowing almost $2,000 a month. And it just goes to show you why it's really important to follow this rule, especially when you're looking at investment properties. So, you know, if you're thinking about investing in real estate, like now is the time to jump in, because if interest rates go up to 10% or even 11 or 12, you could essentially kind of you would still be cash flowing, but right now you could cash flow $3,000 a month if you put 20% down on an investment property, and versus like you waiting until it goes up to 10 or possibly 11% for investment properties, you might not start, you know, margins start getting really slim. Now, the cool thing is the people that got in here will, you know, they're sitting on a true asset, right? So one of the things that they could make this property sellable is they could do owner financing, right? So the people that are here, they could do the 4% rate, people could do owner financing if they want to sell. And this is just showing you like an exit strategy in case you do want to sell at 4%, because you have a lower rate, but guess what? You're cash flowing $5,000 a month, right? So basically, you could even sell this property for higher, right? Maybe you sell it for 1.2, maybe you sell it for 1.3, but you're able to get the price that you want because of that cash flow. And that's why it's really important to purchase property, um, and just wait. You know what I mean? Like, because at the end of the day, using the 1% rule, you're always going to cash flow, like based on what I see here. So if you're thinking about buying an investment property, now is the time to do it. I highly suggest going ahead with it, even though interest rates are quote unquote high. I wanted to do this video today to show you guys, hey, look, it is still possible to cash flow. So hit that subscribe button below, like, follow, comment. I'll see you guys on the next one. Take care.